Yubawan and Kia Roa. Welcome to the CA Sri Lanka New Zealand Chapter Knowledge Hub. So, you all know how we accountants love our rules, right? International Accounting Standards Board, IASB, often introduces changes to keep standards relevant and aligned with evolving business practices. That's exactly what's happening now with the new IFRS 18 standard. Wanted to have a quick chat about this. Nothing too complicated, just a simple summary to explain what this new standard is all about. Think about the income statement, or the P&L as we call it. For years, different companies have been presenting it in slightly different ways. Some companies would show something called operating profit, others would have EBIT, some would just have their own made-up subtotals. It was a bit of a mess. Trying to compare two different companies was like trying to compare apples and oranges. It was very confusing for investors and everyone else looking at the financial statements. So, the IASB decided to bring some order to this chaos, nuts, where IFRS 18 comes in. It's not changing the numbers we report, but it's changing how we present them. The main idea is to make the P&L statement more consistent and comparable across all companies. It's like giving everyone the same template to follow. The biggest change is the introduction of 3 new mandatory categories in the P&L. First, we have the operating category. This will cover all our key income and expenses, showing us the clear operating profit. It's super helpful for understanding how our business is really doing. Next is the investing category. This is for income and expenses from investments that are not part of the main business. Finally, we have the financing category, which will show the costs of funding the company, like interest expenses. Putting everything into these 3 buckets, it becomes much easier to see exactly how a company is making and spending its money. Another important thing IFRS 18 brings is new rules about management-defined performance measures, or MPMs. You know how companies sometimes create their own performance metrics, like adjusted EBIT. Now, if they use these, they have to explain exactly how they calculated them in the notes to the accounts. This brings a lot more transparency, so no more hiding things in confusing numbers. So, to summarize, IFRS 18 is all about presentation and disclosure. It's about making our financial statements clearer, more consistent, and easier to compare. It will be mandatory from 2027, so we have some time to get ready. But it's good to understand it now. It's a good change, one that will make our lives as accountants and the lives of investors a lot easier.